The Peter Schiff Show.
Well, today gold finally set a new all-time record high. Again, we're talking nominal highs. The new high today was 2,140 and change. I'm not sure the exact price, but we took out the old high, which was set in December of last year, which was about 2,135. Now, the largest gold ETF, GLD, actually hit a new record high last week because on that December night when gold traded 2135, it was outside of U.S. stock market trading hours. So the ETFs never got to trade that high. By the time the U.S. markets opened, gold had backed off. And so the ETFs made their new high last week. Now, what's unprecedented really about gold's new high is that there's no fanfare, there's no media coverage, there isn't even any retail participation. Not only is the public not buying into this rally, they've been selling during the entire rally. In fact, going into or looking at the ETFs, the gold ETFs, there's been net outflows of these ETFs every week this year. The public keeps on selling as gold keeps on rising. That's not normal. Normally, the people buy on the way up, they sell on the way down, right? That's wrong, but that's human emotion. When gold's going up, they get excited and they buy, and when it goes down, they get worried and they sell. Well, gold's been going up, and they're not buying. They are selling. Now, if everybody is selling, how can the price of gold be going up? Because if the price of gold is going up, it means somebody is buying to drive it up. And if the public is dumping their gold, why isn't the price falling? Well, because somebody else is buying. Somebody who knows a lot more than the people who are selling. Who is doing that buying? It's central banks. It's foreign central banks. They are the big buyers. That's one reason that silver is nowhere near an all-time record high. Silver is still below $24 an ounce, less than half of its record high, because the central banks aren't buying silver. They don't want to store silver. They buy gold. That is the monetary asset that they are loading up on. And if central banks are buying, there is a reason they are doing it. It's because they are de-dollarizing. They are reducing their holdings of U.S. dollars. Now, if you're going to get out of the dollar, by definition, you have to get into something else. And the something else they're getting into is gold. They're not replacing the dollar with the euro or the yen or the British pound or even the Swiss franc. They are replacing it with real money, with gold. Remember, when the dollar became the reserve currency, it didn't replace the pound, it replaced gold. Up until 1971, all reserve currencies had always been backed by real money, gold. And foreign central banks can read the writing on the wall because they're writing it on the wall. They know how many dollars they're going to be selling, and they're trying to get their hands on as much gold as they can. And the people, individual investors who are being duped into selling it by the mainstream media, are helping the central banks buy more gold for less money. In fact, if you look at what's going on, last week, Newmont Mining, the largest gold company in the world, shares of Newmont Mining last week hit a 5-year low. And there was a major brokerage firm that downgraded Newmont basically to a sell. I mean, they went from a buy to a hold, but on Wall Street, the way they spell sell is HOLD. So everybody knows, wink, wink, a hold means get the hell out of this stock. So they basically put a sell on Newmont, and they said the reason is we don't see any upside potential in gold. 2 days later, GLD hit an all-time record high, 2 days after a 5-year low in Newmont. And now, today, the following week, spot gold hits an all-time record high. Now, Newmont is already about 10% higher than it was last week when Wall Street said to get rid of it. But gold stocks are still way down. They were down 12.5%, I think, last week or something like that, while gold didn't go down at all. Why? Again, central banks aren't buying gold stocks. They're buying physical gold. So while the gold stocks were getting killed, gold was not. Gold is rising because that's what the central banks are buying. And if you want to know what you should do, don't take your investment advice from a bunch of mom and pops or young kids who are buying, on their apps. Pay attention to the smart money running these foreign central banks who have all the data, and more importantly, they know what they're going to do. And the fact that they're buying gold now tells you what they are going to do in the future. And it's not good if you're in the U.S. or you're holders of U.S. dollars. Now, one of the reasons that the public is not buying gold, in fact, one of the reasons they're selling their gold, is because they're getting duped into doing it by the media that is pumping up the new Bitcoin ETFs. This has been a godsend for the foreign central banks because they've been able to buy all sorts of gold that they never could have got their hands on if the public wasn't being fooled into selling their gold to buy fool's gold, Bitcoin. And interestingly enough, both gold and Bitcoin made new all-time record highs today. Bitcoin got above 69,000 for the first time ever. It got to like 69,300, 400. I mean, depending on which exchange you look at. The difference between the new high in gold and the new high in Bitcoin is gold's new high stuck. Yes, gold didn't close at the high. It backed off a little bit and closed, I think, just below 2,130. Still up about $15 on the day. And the GLD ETF closed at a new closing high, and the close for spot gold was a new record closing high. So gold's new high was a breakout. Bitcoin's new high was a double top because within a few hours of trading above 69,000, Bitcoin was back at 59,000, a $10,000 drop in 3 to 4 hours. That's 14% move. All of the big Bitcoin ETFs also made new record highs this morning, and they closed down 8.5% on the day. And we got more idiotic news last night out of Michael Saylor. And yesterday, his stock MicroStrategy was up 20%. Well, today it dropped almost 20%, but dollar-wise, it was a bigger drop. And so MicroStrategy's erased all of yesterday's rally because overnight, this modern day Moby Dick, right? He's the Bitcoin whale, but he's actually Captain Ahab, and his whale is Bitcoin. And he announced that MicroStrategy is going to borrow another $600 million and buy more Bitcoin on leverage after it's gone way up. Well, at least MicroStrategy shareholders decided to abandon ship because Captain Ahab here is going to sink the MicroStrategy ship. It's going down as he chases Bitcoin. But this was a significant reversal. So basically, Bitcoin made a double top today. It wasn't a breakout like gold. But the main reason I'm even bringing up Bitcoin is because people are selling their gold and they're selling their gold stocks to buy the new Bitcoin ETFs. Now, because the central banks are buying the gold that they dumped at a GLD, that didn't cause gold prices to fall. But because foreign central banks aren't buying gold stocks, those prices collapsed as people were selling. Never seen anything like it, but to me, it was an unprecedented gift horse buying opportunity, and I took advantage of it myself, and I've been encouraging clients to take advantage of it. In fact, I did a special SchiffGold video about a month ago, maybe not quite, when gold traded below 2,000 for the first time this year, and it only traded below 2,000 for 2 days. And on the day it went below 2,000, I did a special update, and we mailed it out to all the SchiffGold customers. And I said, this is gold's final shakeout. This is your last chance to buy gold below 2,000, so do it. And a couple of days later, it was above 2,000. Now it's above 2,100 at a record high. It's not too late to buy. We are still right near the bottom. As I've been saying, the new floor in gold, in my opinion, is 2,000. Doesn't mean it can't get below it, although I doubt it's going to get below it again. But when I was saying it, I meant buy it at 2,000. If you can get it cheaper, so much the better. But don't expect it to go much below because that's the floor. The question is, where's the ceiling? There is none because there's no floor to the value of the dollar. There's no ceiling to the price of gold. This is a major breakout. Gold prices are going much, much higher. My suggestion is that you buy more gold. Don't wait. Just buy whatever you think we're buying. Get in there and buy it. Buy it from SchiffGold. Go to the website. I'll give you the number. It's 888-GOLD-160 is our toll-free number. That's 888-465-3160. Buy gold. Buy it tonight when you're watching this if you need gold. Buy silver. Again, silver's not rising yet because the central banks aren't buying it. But eventually, the public will. When the public wakes up to what the media is oblivious to, there's no covering. You watch CNBC, they don't even mention that gold's going up. They're just fixated nonstop on Bitcoin. Somebody finally mentioned gold yesterday. It was Mark Cuban, and they were interviewing him. He was talking about Bitcoin. And then he said, well, Bitcoin's the new gold. And he said he buys Bitcoin over gold all day, every day. Like gold is worthless. We got Bitcoin. Bitcoin made a new high today like gold, but for different reasons. Not only did they have different reactions, but it was a different reason. Gold is going up because central banks are buying, because the dollar's days are numbered, because inflation is going to run out of control. Bitcoin is going up because there's a mania. It's going up because fools who don't know any better are being led like lambs to the slaughter by the Wall Street money machine into these ETFs and out of gold, out of their gold stocks. It's what everybody is selling to buy into these ETFs. That's what you want to buy. The public is doing it ass backwards. The smart money is taking advantage of their gullibility, their ignorance, their greed. And today is just a small taste of the downside that we're going to get in Bitcoin, especially when money starts coming out of those ETFs. Because it's one thing to get your money into a Bitcoin ETF. It's a whole other story to try to get it out. Because when you're buying the Bitcoin ETFs, there's plenty of people who have Bitcoin that will sell to the ETFs. But when people want to sell their ETFs, now the ETFs have to take the Bitcoin to the market. There's no buyers. There's not going to be enough liquidity in the spot market to absorb the selling, and you can't have Tether coming to the rescue. No Tether is allowed to buy when the ETFs are selling because the ETFs have to redeem shares with dollars, not fake dollars, not Tether, but actual dollars, and they're going to be in short supply on these Bitcoin exchanges. But the key is to buy before the public finally wakes up. Because as I said before, normally the public is already buying. And so the risk is that there's going to be a correction because the people got too excited and there's going to be a pullback to shake out the weak hands. Well, we don't need a pullback to shake out anybody. The weak hands are shaking themselves out. They don't even care that the price is going up. So that means this rally is going to continue. I mean, it's not even climbing a wall of worry. There's nothing to worry about because no one is buying. The people who are buying, the central banks, they don't care. They don't care about the price. They just need the gold. They're trying to get rid of their dollars, right? And they're not going to replace it with pounds or euros or yen. They want the real thing. They want gold. So you want to buy your gold. But if you're more aggressive, right? If you're like me, I wasn't adding to my physical gold last week. I added significantly to my gold mining stocks. And even though they've had a nice bump since I was buying last week, they're still very cheap. They're way below where they were in December of last year when gold was lower than it is right now, and even more significantly below where they were at prior peaks. So if you're risk seeking, if you're aggressive and can afford the downside, because what if I'm wrong? Gold stocks are a lot riskier than physical gold. It's a whole different ballgame, but it's a ballgame I want to participate in too because of the risk reward. So what you could do if you want to do that is you can go and buy some of the major gold mining stocks in your brokerage account, or you could buy my gold fund in your brokerage account. The Euro Pacific Gold Fund, anyone who has a brokerage account can go and buy it. The ticker symbol for the no load version. If you're buying it on your own, then no point in paying a load. Just buy it no load. The symbol is EPGIX. That's my gold fund managed by Adrian Day. I think we've got the best portfolio out there. I think we're going to beat all of our competitors. Right now, I think Morningstar has 4 stars on the fund. But what's important is the portfolio and the stocks that we own that I think our competitors don't. I think Adrian has forgotten more about gold mining stocks than most managers know, and he's been doing it for a lot longer. And so I think that we are best positioned to deliver the best risk-adjusted returns in our mutual fund. So buy it. You can read the prospectus. Don't forget, there could be, you could lose money. So don't buy gold fund unless you're prepared to lose money if I'm wrong. But the key is if I'm right, you'll make a lot more money than you'll lose if I'm wrong. I love these odds. The upside potential dwarfs the downside risk. Again, the reason that the gold stocks are so cheap is because the central banks aren't buying those, right? So you're not competing with the central banks. You're getting the gift from all of the fools who have been selling these stocks because of nonstop media pumping of the new Bitcoin ETFs. We've seen tremendous inflows into these ETFs. In fact, I think the total market cap of Bitcoin before it collapsed later today or during the day, I think for the first time exceeded the market cap of silver. And you got all these people that think that the next thing is going to exceed the market cap of gold in their dreams. It's not going to happen. In fact, they think that central banks are going to be buying Bitcoin. They're talking about central banks buying Bitcoin when central banks aren't buying any Bitcoin. What they're not talking about is gold, because that is something that central banks are, in fact, buying right now. And if you look at how much gold central banks own relative to their total Forex reserves, it's small. It's below historic norms, especially in the emerging markets. The bigger exporting nations that have mountains of reserves have a lot of gold to buy and a lot of dollars to sell. So you want to get out in front of this freight train. You don't want to get rolled over by it. So while the mainstream media is distracting average investors with this sideshow in Bitcoin, right? Focus on what's happening in the center ring, the main event, right? The elephant in the room that they're missing is gold. The deterioration of the financial position of the United States. We are now on, the 1-year anniversary of the banking crisis that should have been in March of last year with Silicon Valley Bank, but that bailout matures later, I think next week, this month. This is big. Inflation is running out of control. Interest rates are still much too low. And Powell and the Fed is talking about cutting rates. The markets expect the Fed to cut rates when what they should be doing is hiking rates because they're still too low. They haven't contained inflation. They haven't stopped the credit growth. Demand continues, record high government debts, record high household and credit card debt. And the Fed is about to throw gasoline on the fire by cutting rates. What I also think the Fed is getting ready to do is pivoting its quantitative tightening back to quantitative easing. And I think the foreign central banks can see that coming too. That's another reason why they're not waiting. They're buying their gold now and selling their dollars. And this trend is going to accelerate, I believe, in the days, weeks, and months ahead. So again, the purpose of this special announcement video is to basically transmit the urgency here with what I'm seeing. And before gold puts too much distance between itself and the old record high, or 2,000, 2,100, buy it. Before silver really starts to move, buy it. And before the public wakes up, if you want to buy something that has a lot of potential, people think that Bitcoin is, a leverage play on gold. It's just a leverage play on stupidity. If you want a leverage play on gold, if you want something that can 5x, 10x gold potentially, it's not Bitcoin. It's gold mining stocks. It's junior mining stocks. Just don't go and buy your own. Don't try to figure out the gold mines from the land mines. That's what I got Adrian Day for. That's why I hired Adrian. I'm not even smart enough to figure it out. I know enough to know Adrian knows more about this than I do. And so I hired him to run my fund and pick these stocks for me. And I think he's doing a great job. But I think it's a unique opportunity, maybe a once in a lifetime opportunity to make money by buying what nobody else wants. And I think one of the reasons too that people aren't buying the gold stocks or buying gold, it's not just that they're buying Bitcoin instead. I think a lot of people aren't buying either, but they might be buying gold, but they've got convinced that gold has no upside because they think people are just going to buy Bitcoin instead of gold. They're not buying Bitcoin either because they don't want to take the risk, but they're not buying gold. They might have bought gold if Bitcoin wasn't distracting them. So it's a perfect distraction to provide the cover to have this stealth bull market where you can buy a record high in gold and you're really making a contrarian bet. See, normally if you're buying something that's at a record high, it can't be a contrarian play because if everybody's buying it, well, it's not contrarian. But everybody is selling it. Yet despite all the selling, the price of gold is going up. So it's perfect because I love being a contrarian, which is why I normally don't like buying markets that are making new highs. I like to buy markets making new lows, which is why I bought Newmont when it made a 5-year low, when it was downgraded. I want to buy what people are selling. That's what I'm doing now with gold, only I'm buying at an all-time high. People are selling to me at the all-time high, and we could buy it because the central banks are the ones buying it. It's the smart money getting in, the dumb money is getting out. And you don't want to follow the dumb money. You want to follow the smart money. The people who are buying into the Bitcoin ETFs are in the greater fool dynamic. The problem with the greater fool is eventually you run out of fools or the fools run out of money. But in any event, somebody is the greatest fool who is the bag holder. And the bottom's going to drop out. Unfortunately for the people who bought into these ETFs and sold their gold stocks to do it, when they want to get out of the ETFs and buy back their gold stocks, they're not going to have that much money to buy back in because the money is going to evaporate because the price of the ETFs is going to crash. And so they're going to get back a small fraction of what they put in. And then when they go to buy those gold stocks, I think the prices will be much higher than when they got out. So not only will the gold stocks cost more, but they'll have less money to buy it. Meanwhile, the people who are following me, not only did they not sell their gold stocks, but they took advantage of the sell-off to buy more. So again, to buy physical gold and silver, go to SchiffGold.com. Call us up at 888-465-3160. Gold 160. For your brokerage accounts, you can buy my gold fund, EPGIX, right in your brokerage account. All the discount brokers have it. But if you want to have a separately managed account, if you'd like to buy it from your Euro Pacific advisor working through AGP, you can call him up. You can go to Europac.com. That is the website for Euro Pacific Asset Management. You could speak to an advisor there. There's a phone number there that you can call, and you could speak to an advisor about getting a managed account set up, either one that specializes in the mining stocks, also managed by Adrian Day, or you can invest in any of our other strategies that will all benefit and provide, I think, positive real returns in an inflationary environment with a weak US dollar. Bye for now, and thanks everybody for listening. And remember to tune into my regular podcasts. I'm going to be doing another one tomorrow following the Powell congressional talk. We'll have the results of today's Super Tuesday voting on that. And then I'm going to do another one, I think, over the weekend on Sunday. I'm going to go over day 2 of Powell's testimony. We're going to have the State of the Union address, which is going to be a big lie, by President Biden on Thursday. And then we have the February jobs report on Friday. So a lot of data coming for the next 2 podcasts. So don't miss them. Bye for now.